Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Andrew McOrmond. He's with ETF Trading Solutions over at WallachBeth, and we're going to focus on ETF trends and flows that we saw for the month of July. Great to have you back as always.
Hi, Jill. How you doing?
Andy, and let's talk about this. The top story in the ETF space in July was Japan.
Yeah, it was growth in a specific fund, right? So the JP Morgan Beta Builders Japan, BBJP. So very interesting that it tracks a Morningstar index, TME index, which stands for Target Market Exposure, okay? And it is very similar, correlated, and has very little tracking error to the EWJ ETF, which is the MSCI index. So you would ask, well, why, right? First, the categories wins. EWJ is a monster. It's been around a long time, tons of liquidity. So why this ETF? Well, it's a cost story. And when you come out with a lower cost, Vanguard started it, right? And it's caused a big kind of political debate in our industry. But for the end investor, you can't argue that lower cost is better, and especially when you're talking about beta, and that's what this is. So you're essentially comparing apples to apples with these two products, and you're getting it for a lower cost. So the JP Morgan ETF is just under 20 bips, and the EWJ is 49. So it's hard to argue that. They both have over 300 stocks, and it's raised over $1.5 billion of AUM in a month. So the liquidity will be there, the AUM is there, so there's really not that reason to shy away from it. But we should point out when we're talking about Japan, there is a third ETF, and it was the darling of the ball a few years ago. That's Wisdom Tree's DXJ. But it's to note that performs in an environment when the dollar is up and the yen is down. You really have to have both to have the impact. So we are now currently in a dollar rising environment. If economic stimulus or if there's a devaluing of the yen again, then DXJ will outperform both, regardless of the expense ratio. And you always want to talk about what the total return is, not just focus on which is the cheapest. But in the case of the JP Morgan ETF, that's why it's a pretty exciting story.
All right, and now would you say that all growth ETFs are like, because there seem to be a lot of them out there?
Yeah, where there's new products coming out, right? And I think the Nuveen, the NULG, is a really good story, and based on the fact that it's an ESG fund. Now, ESG funds are coming. They're here, and there's more, right? And there's a lot of it driven by our youth and millennials and the things that they want. And it's certainly not a bad thing to focus on ESG, right? Which stands for environmental, social, and governance, right? Now, there's a lot of different definitions of those, but that would guide those three letters. There still has to be a performance story. So when you ask me, what's the difference in the growth funds? It's funny that the Nuveen, the New Shares Fund, had screened out Facebook on the past data breaches before the earnings cycle this last month. So when you compare that to other other growth ETFs this past month, they didn't take the Facebook hit at all. They had also screened out Equifax earlier before that. So there is a performance story if you look for it. It's not a low vol. That's an important distinction, because volatility can kind of hit any stock. But it's what they would like to say, and I kind of agree with them, is it's a lower headline risk. Right. So companies that don't fall under that screening can have a bigger headline risk, and something that, of course, that happens to one company is more than likely to happen to that company versus one that it hasn't. So the other thing I would say is with all ESG funds, if you're going to look away from growth for a minute, they're all different. They're actively managed, so you are getting something for that higher expense ratio, but make sure you go under the hood and see what their ESG rules are.
Well, speaking of tech, we've seen a rotation out of that in July as well. And in fact, tech ETFs were one of the most highly shorted sectors in July. Right.
I think obviously the earnings miss was important. I think they may have been overcooked, but there is something interesting about these growth companies. We talked about XLC the last time I was on the communications, right? I saw an interesting article this past week that talked about Facebook's problem is they're going to run out of humans. Now, as crazy as that sounds, think about what their growth is. The PE that it's trading at is forecasting it to just double and double and double and double and double. And when I read this article, running out of humans, when you get into the numbers, it actually makes sense. So the tech sector has been driven by these high flyers. I think they're kind of questioning where the new subscribers will come from, and perhaps that led to the shorting activity.
All right. Well, thank you very much for joining us at MarketSite, as always, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.